Netflix is going to be charging you even more money. So, no more family freeloaders. Netflix to charge extra for sharing accounts. The days of freeloading off a friend's Netflix account could soon be over as part of an ongoing campaign to crack down on rampant password sharing. The California based streaming giant unveiled plans to charge primary account holders extra for users outside their households. For the last year, we've been working on ways to enable members who share outside their household to do so easily and securely while also paying a bit more. Cheng-Yi Long, Netflix director of product innovation, wrote in a blog post. The streamer had previously ignored extra familial account sharing despite banning the rampant practice. Sharing among those who live in the same household is still permitted. However, they decided to make a change after deeming that impacted our ability to invest in great new TV and films for our members. Now the company is testing a new feature in Chile, Peru, and Costa Rica that allows standard and premium plan holders to add sub-accounts for up to two people they don't live with, each with their own profile, personalized recommendations, login, and password per the site. These will run subscribers 2,380 Chilean pesos in Chile, or $2.99 in US dollars in Costa Rica, and 7.9 Nuevo Sol in Peru. Additionally, the pilot program permits subscribers to transfer user profiles to new accounts, which would in theory inspire freeloaders to pay for their own plans. Nonetheless, many streaming devotees weren't thrilled with the proposed policy, which they deemed just another way to strong arm customers for extra cash. Netflix will lose a lot of customers if they do this password sharing crackdown they plan to do, fumed one displeased customer on Twitter. Charging extra in crap, especially when they don't carry a lot of good content anymore, like some of the other streaming apps. Another deemed the measure unfair as it penalized family members who don't live in the same household. How do you expect families to handle password sharing in the case of divorcees, their children, or college students away from home? They wrote. We already pay a lot for it, now you're just milking us for every dollar spent. Fortunately, Long said that Netflix will be working to understand the utility of these two features for members in these three countries before making changes anywhere else in the world. And Amazon closes an $8.5 billion MGM studio purchase despite the FTC scrutiny. Amazon closed its $8.5 billion deal for entertainment giant MGM on Thursday, acquiring the studio behind hit franchises such as James Bond and sidestepping regulatory scrutiny from the Federal Trade Commission. With the deal, Amazon and its Prime Video platform gain access to MGM's extensive catalog, including more than 4,000 films and 17,000 TV episodes, the companies noted. The transaction was first announced last May. We welcome MGM employees, creators, and talent to Prime Video and Amazon Studios. We look forward to working together to create even more opportunities to deliver quality storytelling to our customers, said Mike Hopkins, Senior Vice President of the Prime Video and Amazon Studios. The FTC faced a mid March deadline to take legal action after Amazon certified to the agency that it provided all necessary information requested by antitrust investigators. The FTC has yet to file a challenge clearing the way for Amazon's acquisition to proceed. The deal closed despite pushback from several labor groups which asked the FTC to block the transaction, arguing it would stifle competition in the streaming market. As the Post previously reported, the Amazon MGM deal was in limbo for months as the FTC, led by antitrust champion Lina Khan, pursues a crackdown on the tech sector. The FTC, in a statement to the Post, declined to comment specifically on the tie-up, but said it could challenge the deal at any time if the regulator determines that it violates the law. It isn't clear if the FTC planned to challenge the Amazon tie-up now that it's closed, and Amazon declined further comment. The $8.45 billion transaction is the second largest acquisition in Amazon's history, trailing only its $13.7 billion deal to buy grocery chain Whole Foods in 2017. While the deal has concluded and the FTC's initial deadline to challenge it has passed, the agency could still attempt to intervene in the future. The Commission could still pursue action if the majority of its five-member panel voted to challenge the acquisition, according to the Wall Street Journal. And earlier this week, Amazon MGM deal received full approval from the European Commission, which determined the addition of MGM's content to Amazon's Prime Video offer would not have a significant impact on Amazon's position as provider of marketplace services. We are excited for MGM and its bounty of iconic brands, legendary films, and television series, and our incredible team and creative partners to join the Prime Video family, said Chris Britton, Chief Operating Officer of MGM. The acquisition expands Amazon's content pool during a period of intense competition in the streaming sector. Amazon's Prime Video is competing for viewership with streaming giant Amazon and Disney Plus, among other platforms. And the Moderna CEO sold more than $400 million in the company's stock during pandemic. So Moderna CEO Stefan Bancel has sold $408 million in company stock since the start of the coronavirus pandemic, during which the firm's share price soared more than 600% while it developed and rolled out its vaccine. The Cambridge, Massachusetts-based biotech firm developed the second most popular vaccine used to combat COVID-19 in the United States. The shot, jointly developed by Pfizer and BioNTech, is the most widely used vaccine in the U.S. Since January 2020, Bancel cashed out stock options through the 10b5-1 plan, which allows executives to sell a predetermined number of shares at regular intervals to avoid the possibility of insider trading, according to CNBC. But critics say that 10b5-1 doesn't allow for transparency since executives aren't required to disclose these transactions to the Securities and Exchange Commission. The Post has reached out to Moderna seeking comment, and in total, Bancel sold more than 2.8 million shares of the company since January 2020. And last year, Moderna turned its first ever profit in the 12 years of its existence. It generated $17.7 billion in sales of its COVID-19 vaccine, which it rapidly developed in conjunction with the National Institutes of Health. Moderna also benefited from taxpayer assistance through Operation Warp Speed, the Trump administration's plan to quickly research and develop a coronavirus vaccine. The Moderna vaccine, the only product that the company has made, which has proven a commercial success, has transformed Bancel into a billionaire. His net worth is now estimated at $5.3 billion. Last year, Democratic Senators Elizabeth Warren of Massachusetts and Chris Van Hollen of Maryland and Sherrod Brown of Ohio called on the SEC to reform the 10b5-1 rule. And early this year, Bancel said he anticipates people will need a second COVID-19 booster shot this fall as the vaccine's efficacy wanes over the next few months, and Moderna's announced during its third quarter earnings results that commercial booster market sales could reach $2 billion in the United States in 2022. And finally, this last story, which I thought was kind of interesting, is that 1 million new millionaires were created in the U.S. last year, and the richest got richer, the report says. So the roaring stock market and crypto gains created more than 1 million new millionaires in the U.S. last year, according to a new report. The number of Americans with $1 million or more in investable assets surged to a record 14.6 million in 2021. Up from 13.3 million in 2020, according to a report from wealth research firm The Spectrum Group. The growth rate of over 10% was the strongest in years, boosted by trillions of dollars in wealth created by the stock market, crypto, and other assets. It was the strongest year ever for millionaire creation in all segments, said George Walper, president of Spectrum Group. The wealth surge was strongest at the top. The number of Americans worth $25 million or more surged by 18%, and there are now record 252,000 Americans worth $25 million or more, up from 214,000 in 2020. By contrast, the number of so-called mass affluent investors, are those with between $100,000 and $1 million, grew by about 2%. The stock market was by far the largest engine of wealth creation for millionaires and the wealthy in 2021. The S&P 500 gained 27% last year, while the Nasdaq was up 21%. The wealthiest 1% of Americans gained over $3 trillion in stock market wealth in 2021, according to Federal Reserve data. Crypto and other assets such as NFTs, collectibles, and real estate also gain in value, adding to the wealth of the wealthy. The total market cap of crypto assets, despite wild swings in prices, gained $1.5 trillion last year to over $2.3 trillion, according to CoinGecko. Values of private equity and venture capital investments also surged since the wealthy can afford to put more of their money in investments, especially those with the highest risk and rewards. Ultra millionaires benefited more than the mass affluent in 2021. The wealthy have the greatest exposure to the broadest investments, Walper said. It wasn't just traditional liquid markets that did well last year, it was also alternative investments, real estate investments, and crypto. The wealth gains at the top also widened the wealth gap in the US, and the share of wealth held by the top 1% grew to a record 32% last year, according to the Fed. Wealth experts say it's unlikely that last year's gains will be sustained in 2022, giving soaring inflation, rising interest rates, and a potential economic slowdown. Stock market declines have already started trimming the paper fortunes of investors. The Nasdaq is down 14.5% for the year, while the S&P is down 8.4%, and every day changes, so it's hard to predict where the year will wind up. Walber said, but the first few months of 2022 have already painted a different picture than 2021. And if you're interested in learning how to get out of debt and manage your money, go to 40inbox.com.